Breaking news in the world of finance: the real estate market and the stock market are going head-to-head in 2026. With interest rates on the rise and a potential recession looming, investors are scrambling to make the best decisions for their portfolios. The real estate market has traditionally been a safe haven for investors, but the stock market has been gaining traction in recent years. As we move into the second quarter of 2026, it's critical to understand the pros and cons of each investment option. The stakes are high, with millions of dollars on the line. The real estate market is expected to grow by 10% in the next year, while the stock market is predicted to rise by 15%. Welcome to our channel, where we provide exclusive insights and expert analysis on the latest financial trends. If you're looking to grow your wealth and make informed investment decisions, you're in the right place. Be sure to subscribe to our channel and hit the notification bell to stay up to date on the latest news and updates. We'll be covering topics such as finance, investment, insurance, and more. Our goal is to provide you with the best information possible, so you can make the most of your money. With a team of experienced financial experts, we'll be bringing you the latest news and trends in the world of finance. To understand the current state of the real estate market and the stock market, we need to look at the historical context. Over the past decade, the real estate market has experienced a significant boom, with housing prices rising by over 50% in some areas. However, the stock market has also seen significant growth, with the S&P 500 index rising by over 200% since 2010. The COVID-19 pandemic had a major impact on both markets, with the real estate market experiencing a slowdown in 2020 and the stock market experiencing a significant decline. But as we move into 2026, both markets are expected to continue growing, with the real estate market predicted to rise by 10% and the stock market predicted to rise by 15%. Now, let's take a closer look at the current state of the real estate market. With interest rates on the rise, it's becoming more expensive for buyers to purchase homes. However, this has also led to an increase in rental prices, making it a good time for investors to consider purchasing rental properties. The average rental price in the U.S. is now over $1,800 per month, with some areas experiencing rental price growth of over 20% in the past year. This has led to an increase in demand for real estate investment trusts, REITs, which allow investors to invest in real estate without directly owning physical properties. REITs have become a popular option for investors, with over $100 billion in REITs traded on the stock market in 2025. But that's not all, the stock market is also experiencing significant growth. With the rise of technology and e-commerce, many stocks are experiencing significant gains. The tech sector has been a major driver of growth, with companies such as Apple and Google experiencing significant increases in stock price. In fact, the tech sector has grown by over 50% in the past year, with some stocks experiencing gains of over 100%. This has led to an increase in demand for index funds and ETFs, which allow investors to diversify their portfolios and invest in a broad range of stocks. The average return on investment for index funds is now over 10%, making them a popular option for investors. Now here's where it gets interesting: the real estate market and the stock market are not mutually exclusive. In fact, many investors are using a combination of both to diversify their portfolios. By investing in real estate and stocks, investors can reduce their risk and increase their potential for returns. This is known as a diversified investment strategy, and it's becoming increasingly popular among investors. For example, an investor could invest in a REIT and also purchase stocks in a tech company, such as Tesla or Amazon. This would allow them to diversify their portfolio and reduce their risk. But what about the risks involved? Both the real estate market and the stock market come with their own set of risks. The real estate market is subject to fluctuations in housing prices and rental income, while the stock market is subject to fluctuations in stock prices and market volatility. However, by using a diversified investment strategy, investors can reduce their risk and increase their potential for returns. It's also important to do your research and consult with a financial expert before making any investment decisions. For example, an investor could consider working with a financial advisor to create a personalized investment plan. Now, what I'm about to tell you next is something most people completely miss: the tax implications of investing in real estate and stocks. The tax laws surrounding real estate and stocks are complex and can have a significant impact on your investment returns. For example, investors who purchase rental properties may be able to deduct expenses such as mortgage interest and property taxes from their taxable income. On the other hand, investors who purchase stocks may be subject to capital gains tax when they sell their stocks. It's critical to understand the tax implications of your investments and to consult with a tax professional before making any decisions. For example, an investor could consider working with a tax advisor to optimize their investment strategy and minimize their tax liability. As we take a deeper dive into the world of real estate and stocks, it's clear that both markets have their own unique benefits and drawbacks. The real estate market offers a tangible ET and the potential for rental income, while the stock market offers the potential for high returns and liquidity. However, both markets also come with their own set of risks and challenges. By understanding these benefits and drawbacks, investors can make informed decisions and create a diversified investment portfolio. For example, an investor could consider investing in a real estate crowdfunding platform, such as Fundrise or Rich Uncles, which allows them to invest in real estate development projects and earn returns through rental income or property appreciation. But not everyone agrees. Some investors are convinced that the stock market is the way to go, while others are convinced that the real estate market is the better option. The debate between real estate and stocks has been ongoing for years, with each side presenting their own set of arguments and data. However, the truth is that both markets have their own unique benefits and drawbacks, and the best investment strategy will depend on the individual investor's goals and risk tolerance. For example, an investor who is looking for a low-risk investment may prefer to invest in a high-yield savings account or a dividend-paying stock, while an investor who is looking for a higher return may prefer to invest in a real estate development project or a growth stock. As we consider the impact of the real estate market and the stock market on our personal finances, it's critical to understand the bigger picture. The health of the economy and the job market can have a significant impact on both markets, and it's essential to stay informed and adapt to changing circumstances. By understanding the trends and patterns in the real estate and stock markets, investors can make informed decisions and create a diversified investment portfolio. For example, an investor who is considering purchasing a home may want to research the local job market and economy to determine if it's a good time to buy. They may also want to consider working with a financial advisor to create a personalized investment plan. So, what does this mean for you? If you're considering investing in real estate or stocks, it's essential to do your research and consult with a financial expert. By understanding the benefits and drawbacks of each market, you can make informed decisions and create a diversified investment portfolio. Remember, investing is a long-term game, and it's critical to be patient and disciplined in your approach. For example, an investor who is looking to invest in real estate may want to consider working with a real estate agent to find a property that meets their needs and budget. They may also want to consider investing in a real estate investment trust, REIT, or a real estate crowdfunding platform. As we look to the future, it's clear that both the real estate market and the stock market will continue to play a significant role in the world of finance. With the rise of technology and e-commerce, new investment opportunities are emerging all the time. By staying informed and adapting to changing circumstances, investors can stay ahead of the curve and achieve their financial goals. For example, an investor who is interested in investing in the tech sector may want to research companies such as Google or Amazon, which are leaders in the field of e-commerce and technology. They may also want to consider investing in a tech-focused ETF or index fund. According to expert predictions, the real estate market is expected to continue growing in the next year, with a predicted growth rate of 10%. The stock market is also expected to continue growing, with a predicted growth rate of 15%. However, it's essential to remember that these are just predictions, and the actual performance of both markets may vary. By staying informed and adapting to changing circumstances, investors can stay ahead of the curve and achieve their financial goals. For example, an investor who is considering investing in the real estate market may want to research the current trends and patterns in the market, as well as the potential risks and challenges. In conclusion, the battle between real estate and stocks is a complex and ongoing debate. By understanding the benefits and drawbacks of each market, investors can make informed decisions and create a diversified investment portfolio. Remember to stay informed, adapt to changing circumstances, and always consult with a financial expert before making any investment decisions. And if you're looking for more information on how to invest in real estate or stocks, be sure to check out our other videos and articles on the topic. We'll be covering topics such as how to get started with real estate investing, how to choose the right stocks for your portfolio, and how to create a diversified investment strategy. Thanks for watching, and don't forget to like and subscribe to our channel for more videos on finance, investment, and insurance. If you have any questions or comments, please leave them in the section below. We'll be happy to answer them and provide more information on the topic. And if you're looking for more information on how to invest in real estate or stocks, be sure to check out our other videos and articles on the topic. We'll be covering topics such as how to get started with real estate investing, how to choose the right stocks for your portfolio, and how to create a diversified investment strategy. And finally, don't forget to check out our next video, where we'll be discussing the latest trends and patterns in the world of finance. We'll be covering topics such as how to invest in cryptocurrency, how to create a retirement plan, and how to navigate the complex world of insurance. So be sure to subscribe to our channel and hit the notification bell to stay up to date on the latest news and updates. Thanks again for watching, and we'll see you in the next video.